Good morning. Here we are at the very first Facebook Live market update from the Kim Mixon team for 2021. And wow, what a crazy year it's already started off to be. It's funny because new year, kind of everybody thinks, oh, we're leaving 2020 behind and it's a fresh new start. And in some regards, that is the case. But in some ways, it's just the next day and the next day and what the future brings. And it is kind of a good, New Year's is always a good reset for me. Just looking at the past year, looking forward into the next year when I'm looking at goals, both personally and professionally. But the truth is, we're still dealing with a lot of the madness that was created in 2020. It is carrying over to 2021 in some ways, and that's just kind of what life is about. That's how things go. So we're working through and figuring out and staying in this together with you guys. And of course, from the perspective of economy and all of that, we come to you from the real estate side of things, and more specifically concentrating on local real estate market. Of course, knowing what's going on throughout our country in real estate is important as well. So I spend a lot of time researching and reading details and trying to know what's happening, what the predictions are. Of course, you hear a lot of different opinions about what 2020 is going to bring for us in terms of housing and economy and all of that. So, you kind of pick the opinions, I guess, that you want to follow. I tend to look at the opinions that are more fact-based, that seem to come from a reality that makes sense to me, not just someone's opinion and, oh, okay, well, I believe that because that's their opinion. I like to know why they think that way, and when they're making predictions for what the future in real estate is going to look like over the next 3, 6, 9, 10 months, 12 months, what 2021 is going to bring. I want to know kind of a full perspective. So in that, what we're going to do today, a couple of things I want to talk about. One, I am going to go through kind of the year-end wrap-up for our local real estate market with Muskogee, Harris, Russell, and Lee counties, the coverage area that my team covers in our local market, and let you know sort of some quick stats on how things ended. It really was a good year in real estate. So I'm not saying everything was good, but in the real estate world, it was good. And a lot of good things happened despite all of the madness around us. So we're going to talk about that. And the other thing I want to talk about is something I've seen that's really kind of ramping up in discussions, and I've been asked about it several times recently. So I thought I would discuss it quickly this morning, is what is going to happen with regard to foreclosures. And kind of there's this idea that because of forbearances, now we're going to potentially go into some type of foreclosure housing crisis, all of this doom and gloom. So I want to kind of leave you today after my discussion with sort of some information and thoughts. Obviously, I do not have a crystal ball, so I cannot tell you exactly what is or is not going to happen, but I do follow some very well-educated and smart people in the real estate world, and I listen again to their views and kind of where they're coming from a base of knowledge, and then how they back that up with facts to figure out what I think and feel about the market. And then I apply that to our local market, because yes, you've got national circumstances, but every local market has their own circumstance as well. And there are a lot of factors that impact a local economy. So I don't necessarily hear what's happening nationally and think, oh, well, that's exactly what's going to happen in our area, in our hometown, and in my market. So what we're looking at is kind of one of the hot words is forbearance. And the definition, I've got it here. I wanted to tell you the definition of forbearance and how that kind of relates to foreclosure and everything. Forbearance is the action of refraining from exercising legal rights, especially enforcing payment of debt. Okay. And so what's happened in this economy and when the market or when the pandemic kind of really took off and things got crazy and there was all kinds of uncertainty is mortgage companies started allowing for forbearance, which means they were allowing their clients their homeowners to not make payments, to have or to work out some other payment arrangements while they might have been out of work and not getting paid. And of course, there are a lot of things that come with that. And that's a whole nother post that I could do, or a whole nother Facebook Live. But in short, they did allow for forbearance to happen, which meant rather than telling people, hey, you can't make your payments, we're foreclosing, you've got to get out. They said, no, let us work with you. We know this is an economic hiccup. It's not going to last forever. And the bottom line is, no mortgage company wants to see a replay of 2008 and what that housing crisis was. So they're going to do everything within their power to work with people reasonably and to keep foreclosures from happening. But undoubtedly, there's going to be foreclosures and maybe a few more than what there would have been. But the truth of the matter is, and what some people don't really realize, is there are always foreclosures. I think statistically, I was looking at something and it was on average, just on average since like 1991, every quarter there are about 206,000 foreclosures. And so that's always going on. So to say that there's going to be foreclosures is accurate. There will be, but there always are foreclosures. There are always circumstances that people are going through. Obviously, the pandemic and the shutdown and a lot of the economic state that happened through all of that most certainly impacts foreclosures. But remember this, it does not necessarily mean foreclosures don't equal housing crisis. And when you think about housing crisis, and most people kind of think back to like 2008 and what happened with all of that. When we went into that recession, which you have to know and understand, is that housing is what led us into that recession. It was a negative economic climate due in large part to housing, and people did not have equity. There was a major shortage of equity in people's homes. So when we're looking, fast forwarding to kind of the recession period that we might be in now, I don't love that word, but if you want to use that word, certainly in an economic situation for sure. When you look at that, it was not led by housing. It was not what has happened with us now was not led by a crisis in housing, a mismanagement of housing. It is a pandemic. So it's not housing that is causing an economic shift. Now, housing is obviously impacted by that, but I've been saying this since the spring when I started doing Facebook Live back in March when we were all shut down and I was doing weekly updates for you guys to keep everybody informed. You know, as we rolled into the summer, it became very clear that housing is most likely what's going to lead us out of an economic downturn currently. So going back to forbearance and what that means. Back in the summer, there were crazy predictions about forbearance. As a matter of fact, they were forecasting, most of the experts were forecasting somewhere around 30% of mortgages would go into forbearance. And that would have been huge. You know, that's 30% of mortgages would be huge to see that number in forbearance. And certainly, had that actually happened, we might be having a whole nother conversation about housing right now. But what I want you to know is the fact of the matter is that did not happen. About 8.6% of mortgages went into forbearance. And there was a pretty significant number of those people who actually applied for forbearance, got approved for it, and did not use it. They were preparing for the worst case scenario, but in fact were able to continue making their payments. And many of those people who went into forbearance were actually able to get everything back on track. So right now there's, I think, about 5.5%. In December, that was the number, and I'm waiting for some updates on numbers now, but about 5.5% of mortgages are still in forbearance. Now, of course, I know everybody's a little anxious to see in the coming days, weeks, and months throughout the country how other shutdowns that could happen because of the pandemic may impact that number some. But the bottom line is there was a prediction of 30% going into forbearance, and it was actually only 8.6. And then right now, it's probably somewhere around 5.5 that are actually in forbearance. So what does that mean in terms of foreclosures? Yes, unfortunately, some of those probably will be going into foreclosure. Some of those homeowners may not be able to make ends meet, get caught back up. Maybe they're still dealing with, being out of work or different circumstances like that. So I'm not saying everything's going to be rainbows and lollipops and nothing bad's going to happen. There are people that unfortunately are going to kind of have issues as the banks start to sort of say, all right, we need these mortgages back on track now. So that being said, I do not see, especially in our local economy, that is going to be a major, major issue for us that will impact housing in a negative way. Even some foreclosures are normal, like that happening, that's normal. There's always foreclosures out there. You don't always hear about them because oftentimes those foreclosures are kind of bought at the courthouse steps or sort of under the table, and they never actually hit the market. So you may not really realize how many foreclosures still happen, even in a fantastic housing market. So that being said, for those of you that have asked me a lot about how forbearance and foreclosures are going to impact our local market, again, I don't have a crystal ball. I can't tell you exactly what's going to happen. And I think as those forbearances come due here coming into the spring and early summer, we'll get a better idea. But I really don't feel like it's going to cause a major negative situation in our local market, meaning I don't think those foreclosures are going to all of a sudden drive pricing down and cause problems along that standpoint. Now, there may be some good deals to be had, and that would be great. We are actually currently still extremely low interest rates and very, very low inventory. So even with those foreclosure situations, there's a good chance you may not even see many of them ever hit the market because they'll get bought before they hit the market and then, flipped by investors and things like that. But there could be, for those of you on the buying side, there could be some good opportunities to get some deals, so to speak. That being said, I also would like to ask that if you do know anyone that is in a tough economic situation with their house and they're struggling right now, we have seen all-time highs of equity in property. Again, going back to 2008, equity was very, very low. People did not have equity in their homes, and that was a lot of the problem with the market crash. But now, even those people who are in distress, many of them have decent equity in their home, even if they don't know it. Sometimes they don't realize because they don't keep up with what the current value of their home might be. They're just looking at what their circumstance is, not being able to make their payment. If you know anybody that's struggling, that maybe needs some help, guidance, advice, send them my way. Tell them to call me. I am happy to talk to them about it and help figure out what is their equity position. Are they in a position where they can potentially sell it without it having to be a distress sale? Now, they may not be able to make a ton of money. There depends on how far behind they are in their mortgage, what their payoff is, what penalties there may be if they are behind on the mortgage. But sometimes I think people get behind on a mortgage and they give up and they don't think that there's any solution or any help out there. And there are solutions. I'm not saying that everybody's going to be in that situation, but I hate to see somebody go into foreclosure, lose their home, wreck their credit if it's not what has to happen. So if you know anybody that is kind of struggling and trying to make ends meet and maybe selling their house would provide some relief, I'm not here to sell somebody's house that doesn't want to sell it or doesn't need to sell it, but I am here to help those who've got questions, concerns, and if it's the right thing, if we pull the information together and it's the right thing for them to do and it prevents them from being in a negative situation like foreclosure, we certainly want to help with that. So keep that in mind. And if you know somebody or know of somebody, send them my way. Tell them just call me. I mean, it doesn't mean they have to sell their house. It doesn't mean any of that. It just means I'll help get them the information that they need to make the best decisions for themselves and for their families. So that is what I really wanted to kind of tell you about the foreclosure side of things. Something else to think about is when you're looking at, oh my gosh, what's this recession going to mean for housing, or this current economic situation that we're in, what's it going to mean for housing? Something to remember about 2008, because I think that's where everybody's minds automatically go back to, is when everything crashed and how bad things got during that time. At that time, home values were down over 19%. They were down when that happened, not after that happened. Now, they continued to fall after that, but they were already down when that happened. Remember, home values right now are up nationally about 7.3%. Like that's a big difference between 2008 as well. So we've got home values are up. People have much more equity in their homes right now. Interest rates are still very low and inventory is crazy low. So everything, at least going into first quarter right now, is still pointing towards positive market movement in our local housing market. Now, the experts I've been listening to have actually been predicting that the second half of the year may very well be stronger in real estate nationally than the first half of the year. One of the differences between us nationally thinking about that and our local market is our local market's driven largely, a lot of it is through military movement and all of the businesses that survive and thrive off of that military movement. So the military season, as you know, if y'all were joining me for Facebook Live back during the shutdown, the PCS season, the time of year that military moves start to happen, starts to ramp up during the spring through the summer, kind of rounding out in July. So the first half of the year is typically in our local market some of the busiest for us. But even last year, man, it really stayed rocking through third quarter and even into fourth quarter. We did get a little bit of a slowdown around the holidays, but I mean, that was nothing that isn't normal. I mean, we always get a little bit of a shift in movement around the holidays. So that wasn't anything that was crazy. And then I'll tell you now, at least for me and my team, it was like January 1 hit, the switch flipped up again, and it has been crazy busy. We have been running and gunning, working on homes that are coming on the market. Our team has a ton of homes coming up. Well, not a ton, but we've got a lot coming up. We've had a large amount of buyers out looking, writing offers, making things happen. So where you might have seen things kind of slow down some during the holidays, again, totally normal during the holidays. If people don't have to move, if they don't have to make those decisions, they're often wrapped up with family and things going on, getting ready for the holidays. So we always see a little bit of a downtick in movement. But man, January is already starting off strong. So I'm excited about that. So if you hear if you pay attention to just certain streams of media, you're gonna hear the worst of the worst. Some of the stuff that gets said is crazy to me, and it's often very negative because negativity kind of drives fear, and that keeps you coming back. It's really not got to be a full negative situation. And so I hope for those of you that are fearful about 2021, at least from a housing standpoint, maybe I can help get you kind of away from that fear and say, hey, things are looking good. You know, we don't have a reason to be fearful. Are we paying attention and watching and very mindful of what's happening? Absolutely. Absolutely. Because in this world, not just this area or country or whatever, but in this world, things change fast and they change daily. But right now, there's no reason to fear that we're going to have some kind of major economic housing crisis going into 2021. I think all the predictions, everything that I'm listening to that is really very, very fact-based and looking at history, we are poised to have another good year. And again, right now, interest rates are still low, demand is high, inventory is crazy low. I mean, it's all of the factors that go into making a good housing market are still there for us. And I'm hopeful that that's really going to continue and we're going to see some great things. I think we may see a little bit more inventory this year, but mostly because I think in 2020, many of those who were thinking about selling as the pandemic hit and kind of changed everything for all of us, some of those people sort of pulled back from maybe wanting to sell, saying, hey, I need to kind of sit back, wait, see how things are going to happen. So we may see kind of some pent up seller demand too, some homes coming on the market. I don't think it's going to flood our inventory levels. So I still think at least going into the first quarter, first half of the year, we're certainly going to be still looking at a seller's market with overall lower inventory levels. But hopefully we're seeing some good things coming up here soon. I know as a team, we've got some good homes that are coming on the market here soon. So hopefully this information is helpful to you guys, and I'm going to make a concerted effort to keep bringing you this kind of detail and talking about what those predictions are looking like moving forward. Let me get my notes adjusted here. Let's see. All right, so we are getting into how did 2020 end up in our local real estate market? Where did we end up with home sales? Price point, days on the market, kind of just some quick stats for you guys. And I know you've got to get back to work and get back to life and all of that, so I won't keep you too much longer. But 2020, here is our year-end snapshot review. First, we're going to look at Muskogee and Harris County. Now, all of this data is as it comes to us through the databases that we use, primary database being the Columbus Board of Realtors MLS. So for Muskogee and Harris County, 2020, we closed out approximately 3,284 homes. So, and those are through all price points, and we'll look at a price point breakdown on that in a minute. So if you compare that to 2019 closed out 3,167 homes in Muskogee and Harris County. So we sold 117 more homes in Muskogee and Harris County in 2020 during a pandemic. I think that's phenomenal. And I've said it before, but I often think, well, gosh, what would our year have been if it weren't for the pandemic? How many houses would we have sold then? Of course, we'll never really know that answer, but I think it should bring some confidence to you that not everything is doom and gloom, so don't feel that way. We had a great year in real estate. So looking at some of the breakdown on things, let's talk about what those price point breakdowns and types of financing that people got in 2020. So in 2020, out of the 3,284 closed sales in Muskogee and Harris County, 705 of those were cash. 961 were conventional loans, 589 were FHA loans, 972 were VA loans. So VA loans led the way, which is not surprising considering, like I said a few minutes ago, the military Fort Benning, they really drive a lot of our housing market. Not solely dependent on that, but it is a big part of our market. And then other types of financing, there were 57. So again, we've talked about that. There are a lot of different types of loans that are out there, USDA and other things. And so about 57 of those, which is a very small percentage of what closed, were another type of financing. Price point breakdown for the year, under 100,000, there were 632 closed sales. From 100 to 200,000, there were 1,103 closed sales. From 200 to 300, there were 895 closed sales. From 300 to 400, there were 438 closed sales. From 400 to 500, there were 111 closed sales. And over 500, there were 105 closed sales for the year. So 61% of the market is from 100 to 300,000. Again, that's been on point through the whole year. Of course, sometimes through the year, that's been a higher percentage, but overall, the largest market movement segment for us is that 100 to 300,000 price range. So that stays on point with really what our whole year was from when I started doing the Facebook Live market updates back in March. So that gives you kind of some information about price points and everything for 2020. Looking at average days on the market, in 2020, the average days on the market in Muskogee and Harris County was about 61 days. And the average days on the market in 2019 was about 75. So you see we had less time on the market. And I know that's not like a huge difference, but every day counts, you know. And what this doesn't account for, and unfortunately what's not really tracked through the MLS, is the number of homes that had competing multiple offers. It was crazy. We had so much of that in 2020, which, you know, for a real estate agent is exciting. That's like we're really in our element when that happens. So that was average days on the market. When you look at average sales price, the average sales price on closed sales, and this is actually what they sold for, not necessarily what they listed for. The average sold price for 2020 in Muskogee and Harris County was about $211,000, and in 2019, the average was about $188,000. So you can see that's a pretty significant increase from average home sale price in 2019 to 2020, which kind of shows you what we've been talking about in the value increase and how the seller market and buyer demand drove up some pricing, which drove up our average sales price. So that's good. That's market growth. We like market growth. Okay, let's look at Russell and Lee County and kind of what happened. And this is the information that comes to you from the East Alabama Board of Realtors MLS system, which is our primary database in this area. In 2020, there were 1,615 closed sales. As compared to 2019, there were 1,531. So we sold 84 more homes in Muskogee and Lee County during a pandemic with extremely low inventory. So, I mean, come on, not bad at all. To me, I mean, you see the smile, like that's exciting stuff to me. And again, I hope to see that rolling into 2021. I mean, you know, time will tell. We'll see how it all unfolds. Okay, so looking at what types of financing people got in Russell and Lee County in 2020, out of those 1,615 closed sales, 163 were cash sales, 310 were conventional loans, 388 were FHA loans, 715 were VA loans. And there were about 89 closed sales that were other types of financing. Now, I want to talk about the percentage of closed sales that were VA in Russell and Lee County. You can see it's an even larger percentage than in Muskogee and Harris County. Part of the reason for that is because there are some benefits, especially for retired military. As you retire or are in retirement, Alabama does not tax VA retirement or military retirement, excuse me. So sometimes we'll see more of the military buyers focus on Alabama. I'm not saying all military buyers buy in Alabama, but that certainly is a factor and probably why we see that number where it is. So there are a lot of factors, but that would be one of them. Looking at price point breakdown for 2020 in Russell and Lee County, under 100,000, there were 154 closed sales. 100 to 200,000, there were 757 closed sales. 200 to 300,000, there were 553 closed sales. 300 to 400,000, there were 117 closed sales. 400 to 500, there were 24 closed sales, and over 500, there were 10 closed sales. So 81% of what sold and closed in 2020 for Russell and Lee County, 81% were between 100 and 300,000. So that definitely is a very, very dominant price point in Muskogee and Harris County, or excuse me, not Muskogee and Harris County, Russell and Lee County. On the Alabama side, that price point really, really dominates. So something good to know, especially if you're a homeowner in that price range, thinking about selling or needing to sell, you're definitely in a price range that moves very well and consistently moves in this market. Okay, looking at average time on the market on the Alabama side. So in 2020, it was about 55 days on the market was the average. Now, this is kind of crazy, and I had to keep going back and forth and looking at this. This was kind of crazy to me. In 2019, the average time on the market in Muskogee and Lee County was 130 days. There was a huge drop in time on the market in those counties, largely due to extremely low inventory, low interest rates, and all of that. But that was really cool. I mean, I seriously, when I first pulled those numbers, I was like, no, this can't be right. Kept going back and forth. So we had a significant change in time on the market in Russell and Lee County for 2020 in a positive way. The average sales price in Russell and Lee County for 2020 was $200,000. So just a little bit below the Georgia side. And the average sales price in 2019 was $170,000. So again, we've got a $30,000 increase in average price point. I mean, in 1 year, that's great, guys. That's great. And again, it's because of all of the economic factors. Not only did we see in both counties, not only did we see the average sales price go up, we saw average days on the market go down. We saw inventory levels stay low, which drove great market conditions in many ways. I mean, there's so much positivity. We sold in all of it on both sides of the river. We sold more homes in 2020 than we did in 2019. And 2019 was a great year. Like, we were having a really good year in 2019 too. So imagine had we not gone through everything, all of the social unrest and the pandemic and the political environment. Imagine had none of that happened. Man, could we have sold like another 500 homes? Who knows? I mean, we'll never really know. Hindsight, you know the saying. But we've had some great conditions and it's been very exciting. And we are looking ahead to good things for 2021. I know there's still craziness in the world. And honestly, guys, that's not going away. There's always going to be something going on. There's always going to be some crisis in the news, or there's always going to be something. And I know what's going on is very real and it's impacting very many people in many different ways, and everybody has their own circumstance. And so I don't take that lightly, but I do hope that I can bring you a little bit of positivity, maybe some hope, some, the light at the end of the tunnel kind of thinking. We've got good things that are going on. And for me, I think those of you that know me, I try to focus more on that than I do the other. I like to have my head in a good headspace and not dwell too much on negative things. I do stay in the loop of reality and what's going on, so I'm not uninformed. I tried to stay well informed, but I also tried to not just hold on to doom and gloom. And I think if you are listening to what I'm saying today about our local housing market, what 2020 was and what 2020 is projected to be, we've got very good things to come. And I hope you'll let me and my team be a part of that with you. If you are looking to buy or sell, call us. If you just need some advice to help you figure out whether you not want to buy or sell, let us help you. We are the local experts. And, I might be biased, but I got the best team out there. I've got, not only do we have an extraordinary amount of combined education and experience, but we also have a heart for people, our community, and our clients. We do not look at our clients and see dollar signs. We look at our clients and see, how can we help you and how can we help somebody else that you know, however that is. That may not mean that you list or sell your home right now. It might mean that we just help you by getting you the information you need to make those decisions. And then hopefully from that grows a great relationship for real estate in the future. So let us know what we can do. Let us know how we can help. It is 2021, and making something a good year is really a mindset. It's not about everything that's going on. It's about how you process it and what your inner dialogue is with that. So you can choose for everything to be terrible, or you can choose to process it a different way, to see the good in things, to find the joy, to look for the blessings. You know, those are all choices we make every single day. And you know what? I have bad days sometimes too. You know, I mean, we all do. But by and large, I choose to look ahead, see the good, find the joy, and look for those blessings wherever they might be hiding, because they are always there. So that's what I'm going to say to you for this year-end 2020 market update here, kicking off 2021. We are going to be in close contact. I'm going to be keeping you guys updated and in the loop, and I hope that you enjoy this and that it's informative. And if there's anything you need, call me, let me know, 706-332-6349. This will be, I'll download this and post it on our website, kimmixon.com, in the blog section, so you can refer to it there. Of course, we keep the lives up and going on our Facebook page, and we're trying to work on getting them all onto Instagram as well, because I know some people prefer different formats and platforms for receiving information. So you guys stay happy, stay healthy, look for the joy, find the blessings, and 2021, make it a good year. My mantra for January has been, let's do this. So guys, let's do this. Let's make 2021 a great year. It's a choice. It's a mindset. And in my mind, it's going to be great. See you guys. Have a good one. We'll be back in touch soon.